Hello everyone, welcome back to my channel Topical Economics. In today's video, we will explore some concepts of money and banking, which are key components of Cambridge IGCSE Economics curriculum, paper code 0455. We will be working through some multiple choice questions from past papers, focusing on how to analyze the options effectively and select the correct answers. Whether you are preparing for your exams or just want to deepen your understanding of these topics, this session will provide you with valuable strategies and insights. So let's get started. Starting with our first question. Which advantage do coins have that makes them more suitable than paper banknotes to act as money? Option A, they are more divisible. Option B, they are more durable. Option C, they are more portable. Option D, they are more recognizable. This question is from 2022 October-November paper, version 1. Here, coins are typically made from metal, which makes them more resistant to wear and tear as compared to banknotes. Paper banknotes we are talking about. So this durability means coins can withstand handling and circulation over time without deteriorating as quickly as paper. While divisibility, portability and recognizability are also important characteristics of money, durability is a key advantage that makes coins particularly suitable for long-term use as currency. So the correct answer will be option B, that is, they are more durable. Moving on with our second question, which organizations can directly fund the growth of firms? They have given us options A, B, C, D. And they've given us yes or no for central banks, commercial banks and governments. This question is from 2022 October-November paper, version 1. So let us understand first commercial banks, central banks and governments. So central banks primarily regulate monetary policy and manage the economy's money supply. They do not directly lend to the firms. Instead, they will provide liquidity to commercial banks, which then may lend to businesses. Talking about governments, while governments can fund firms through grants and subsidies, this funding is typically indirect. They do not operate as direct lenders like commercial banks. So when we come to commercial banks provide loans, credit and other financial services directly to businesses. They assess the creditworthiness of firms and offer funding to support their growth initiatives such as expanding operations, purchasing equipment or managing cash flow. So looking at all the options, the correct option is answer B. Moving on with question number 3. Which activity is correctly linked to the organization that provides it? So they've given us options A, B, C, D, organizations and activities. This again is from 2022 May-June version 1. So let us analyze. When we look at option A, that central bank regulates the rate of inflation. So central banks use monetary policy tools to manage inflation and stabilize the currency. This includes setting interest rates and controlling money supply. So this is the correct option. But let us look at the other options as well. Commercial bank sets direct tax rates. This is incorrect because commercial banks do not set tax rates. This is the role of the government to set tax rates. Coming to option C, commercial bank manages the government's financial accounts. While commercial banks may assist in some financial transactions, they do not manage government accounts. So this is incorrect. And looking at the last option, central bank safeguards the country's foreign reserves. So this is a correct function of a central bank, but it is not the main activity which is being, emphasized in this question. So here the answer for this question is option A. That is, central bank regulates the rate of inflation. Proceeding with our fourth question. It is expected that consumers will use less paper money. What is the most likely reason for this? The options are given. Again, this is from 2021 May-June paper, version 1. Let us explore the options and understand. Option A, inflation reduces the value of paper money. So here, while inflation affects the purchasing power of money, it does not directly lead to a reduction in the use of paper money itself. So this is incorrect. Coming to option B, more ways of making payments will be available. This is correct. With rise of digital payment methods, mobile banking and contactless transactions, consumers are increasingly opting for alternatives to cash, making this the most relevant reason. Coming to option C, other forms of money are more durable. So while this is true for coins compared to paper, it does not explain the broader trend of declining paper money usage. So again, this is incorrect. And last option, paper money will have less intrinsic value. This is more of an economic concept rather than a practical reason for reduced use. So the correct answer is option B, because the availability of diverse payment methods is the primary factor driving consumers away from using paper money. Moving on with the fifth question, which function does a central bank provide for general public? Option A, accepting deposits. Option B, issuing banknotes. Option C, making loans. And option D, providing overdraft. This is from 2021 Feb-March paper, version 2. So, first option, acceptance of deposits. So here, central banks typically do not accept deposits from general public. They mainly interact with commercial banks and government entities. So this is not the answer. Issuing banknotes. Option B. This is correct. Central banks are responsible for producing and issuing the currency which is used in an economy. So this function directly affects the general public as it ensures the availability of legal tender for transactions. So this is a correct answer. Let us look at the other two options also. Making loans. Option C. So here central banks lend primarily to commercial banks, not to the public in general. Like directly they cannot lend to the public. So again this is incorrect. The last option, that is providing overdrafts. So again this service is offered by commercial banks and it is not a function of central banks. So the correct answer for this question is option B, issuing banknotes. Coming to question number 6, which function do central banks and commercial banks have in common? Option A, acting as a banker's bank. Option B, controlling monetary policy. Option C, dealing with foreign exchange. Option D, supervising the banking system. This is from 2020 specimen paper, version 1. So here, acting as a banker's bank, which is the first option, this is primarily a function of central banks, which serves as bank for commercial banks, but not the other way around. Commercial banks don't serve as a bank for central banks. So this is not the correct answer. Looking at the second option, that is controlling monetary policy, this is a function which is exclusive to central banks. Commercial banks do not control monetary policy. So again, this is not the answer. Looking at the third option, option C, that is dealing with foreign exchange. So here, both central banks and commercial banks can engage in foreign exchange transactions, although their roles and scopes may differ, but this is correct. So this option is correct. However, look at the last option also, that is supervising the banking system. Again, this is a primary function of central banks. They oversee and regulate commercial banks. The correct answer for this question is dealing with foreign exchange. Option C. Question number 7. Which row shows a characteristic of money and a function of money? So they have given us a table with A, B, C, D options, characteristics and functions. Again, this is from 2020 October-November paper, version 3. So here, let us look at the first option, that is characteristic acceptability, function medium of exchange. This is absolutely correct answer. Acceptability, this characteristic means that money must be widely accepted as a form of payment, and medium of exchange function refers to the primary role of money in facilitating transactions, which is correct. However, let us look at the other option B, C, D as well to be sure. Option B, cash and measure of value. Cash is a form of money, but it is not a characteristic and measure of value is a function, it's not a characteristic. So this is wrong. Option C, divisibility and portability. So both of these are characteristics, neither is a function of money. So this is also wrong. Option D, store of value and bank deposit. So store of value is a function of money, but bank deposit is not a characteristic of money. So the correct answer is option A. Moving on with question number 8. What is an advantage to a country having an efficient commercial banking system? Option A, it controls the money supply. Option B, it discourages spending. Option C, it encourages tax evasion. Option D, it enables investment. This is from 2020 May-June paper, version 3. So here option A, that it controls money supply, is primarily a role of a central bank, not of commercial bank. So this is not the answer. Option B, it discourages spending. Here an efficient banking system typically facilitates spending rather than discouraging it. So again, this is not an answer. Option C, it encourages tax evasion. Again, this is a negative outcome and not an advantage of banking system. Lastly, option D, it enables investment. So an efficient commercial banking system provides access to credit and financial services, thereby encouraging businesses and individuals to invest, which is crucial for economic growth. So this looks as the correct answer. The correct answer is option D. It enables investment. Moving on with question number 9. What is the most important characteristic of money? Option A, it has intrinsic value. Option B, it is generally acceptable. Option C, it is portable. Option D, it is readily available. This is again from 2020 Feb-March paper, version 2. So here, when we look at option A, that it has intrinsic value, while some forms of money like gold may have intrinsic value, most of modern money like paper currency does not. So this is not the answer. Option B, it is generally acceptable. So this is crucial because for money to function effectively, it must be widely accepted as a medium of exchange by the public. So this answer is correct. However, let us look at option C and D also. Option C is that it is portable. So portability is important, but if money is not accepted, portability alone does not ensure effectiveness. So this is not the answer. And option D, it is readily available. So availability is beneficial, but again, acceptance is the key characteristic that enables money to function in the form of money in economy. So here the answer is option B, that is, it is generally acceptable. Proceeding with 10th question. What is not normally a function of the central bank of a country? Option A, acting as a lender of last resort. Option B, issuing notes and coins. Option C, operating the government's monetary policy. Option D, setting the government's budget. This is from 2019 October-November paper, version 2. Let us look at option A, acting as a lender of last resort. So central banks provide emergency funding to financial institutions which are facing liquidity crisis. So this is not the answer. Option B, issuing notes and coins. Again, central banks are responsible for producing and distributing the national currency. So again, this is not the answer. Option C, operating the government's monetary policy. Central banks manage monetary policy to control inflation and stabilize the currency. So again, this is not the answer. Lastly, setting government's budget. This is not a function of central bank. Budgetary decisions are typically made by government or treasury. So the correct answer is option D, setting the government's budget. Coming to 11th question. An African government has abandoned its own dollar and now uses the US dollar as its currency. Why would such a policy have been necessary? The options are given. This is from 2019 October-November paper, version 1. Let us look at the first option, that commercial banks restricted their lending. So while this could impact the economy, it does not directly necessitate abandoning a currency. So this is not the answer. Coming to option B, consumers only used credit cards rather than paper money. So this scenario doesn't directly relate to the decision to abandon a currency. So again, this is not the correct answer. When we look at option C, its own dollar no longer acted as a store of value. So if the local currency is experiencing hyperinflation or severe devaluation, it loses its ability to maintain value, thereby prompting a shift to a more stable currency like a US dollar. So this option is the correct answer. Let us even look at the option D. The central bank controlled the issue of money too tightly. Again, here tight control may lead to liquidity issues, but it does not inherently necessitate banning the currency. So the correct answer for this question is option C. Its own dollar no longer acted as a store of value. Coming to question 12. Which advantage do coins have that make them more suitable than banknotes to act as money? Option A, they are more divisible. Option B, they are more durable. Option C, they are more portable. Option D, they are more recognizable. This is from 2019 May-June paper, version 3. Here, when we look at option A, coins can be divided into smaller denominations, but banknotes also come in various denominations, making this characteristic not exclusive to coins. So this is not the answer. Coming to option B, they are more durable. So this is the correct answer. Because coins typically are made up of metal, they are more resistant to wear and tear compared to paper banknotes, which can easily become damaged over time. However, let us even look at option C and D. Option C is that they are more portable. So coins are relatively portable. Banknotes are generally lighter and easier to carry in larger quantities. So again, this is not the answer. And option D, they are more recognizable. Both coins and banknotes are designed to be easily recognizable, so this is not a unique advantage of coins. So the correct answer is option B, that they are more durable. Proceeding with question number 13. What is a function of a country's stock exchange? Option A, to act as a lender of last resort to commercial banks. Option B, to provide a market for purchase and sale of shares. Option C, to provide short-term loans for investment. Option D, to set interest rates within a country. This is from 2018 October-November paper, version 3. Now here, let us explore all options. When we look at option A, to act as lender of last resort to commercial banks, this function is typically associated with central banks, not stock exchanges. Central banks provide liquidity to commercial banks during financial distress. So this is not the correct answer. Looking at option B, to provide a market for purchase and sale of shares. This accurately describes a primary function of stock exchanges. That is, they facilitate the trading of stocks, allowing investors to buy and sell shares of publicly traded companies. So this is the correct answer. However, let us look at C and D options as well. Option C is to provide short-term loans for investment. This function is more aligned with financial institutions or money markets rather than stock exchanges. Stock exchanges do not provide loans, they just enable the trading of existing securities. So this is again not the answer. And lastly, option D, to set interest rates within the country. Here, interest rates are typically set by central banks through monetary policy, not stock exchanges. So stock exchanges do reflect market conditions but do not directly set interest rates. So the correct answer for this question is option B, that is to provide a market for purchase and sale of shares. Moving on with the next question, question number 14. A central bank acts as a lender of last resort, especially in times of financial crisis. What is the purpose of this function? And the options are given. This is from 2018 October-November paper, version 2. Let us explore all options and decide what is the answer going to be. Option A is to cover credit card debts of consumers. Now this is not a direct function of central bank. Central banks do not intervene in consumer debts. their focus is on the financial system and banks. So this is not the correct answer. Looking at option B, to provide liquidity to the banking system. Now this is the primary purpose of a central bank acting as a lender of last resort. So during a financial crisis, it provides necessary funds to banks facing liquidity shortages, thereby helping them to stabilize the financial system. So this is the correct answer. Let us also explore option C and D. Option C is to remove failing banks from the financial system. While central banks may oversee the resolution of failing banks, their role as a lender of last resort is primarily to prevent failures by providing support, not to remove institutions. So again, this is not the answer. Lastly, to safeguard the profits of the banking system. Again, this is not a central function. While maintaining stability can support banks' profitability indirectly, the primary aim is to ensure liquidity and prevent systemic collapse. Systemic collapse meaning the collapse of the entire system. So, looking at all the options, option B accurately captures the essence of central bank's role in the crisis. Question number 15. What is a function of central bank? Option A, accepting deposits from public. Option B, determining tax rates. Option C, implementing monetary policy. Option D, lending to businesses. This is again from 2018 May-June paper, version 1. Here, when you look at option A, accepting deposits from public. Here, while some central banks may have limited deposit-taking functions, this is primarily the role of commercial banks. So, A is not the correct answer. Option B, tax rates are set by government bodies, not central banks. What central banks do is they focus on monetary policy, not fiscal policy. So, again, this is not the answer. Option C, implementing monetary policy. This is the correct answer because implementing monetary policy is a core function of central banks. They manage interest rates and money supply to achieve economic goals like controlling inflation and promoting employment. Lastly, option D, lending to businesses. Here, while central banks may lend to commercial banks, they do not typically lend directly to businesses. This function is again usually performed by commercial banks. So the correct option for this question is option C. Coming to question number 16. What is not a function of a central bank? The options are given. This is from 2018 May-June version 3. Let us look at all options and evaluate our answer. Here, option A is that it is a lender of last resort to financial institutions. Now, this is a key function of central banks, providing emergency funding to banks in distress. So, this is not the answer. Option B, it is sole issuer of notes and coins. Now, central banks have the exclusive authority to issue currency, which is a fundamental role. So, this is again not the answer for this question. Option C, it lends to individual firms and consumers. Now, this is not a typical function of central banks because central banks primarily lend to commercial banks. They do not directly lend to individual businesses or consumers. So, this option C is the correct answer. Let us look at option D also, that it manages the national debt for the government. Now, central banks often play a role in managing the government's debt, such as issuing government bonds and managing cash flow. So, here option C accurately reflects a function that is not associated with the central banks. So, answer is option C. Next, let us look at question 17. What does a commercial bank not provide? Cash, bonds, loans, or mortgages? This is from 2018 May-June paper version 2. Now, when we look at cash, commercial banks provide cash to consumers through withdrawals and ATMs. When we look at bonds, while banks may sell bonds or invest in them, they do not primarily provide bonds to consumers as a core service. Bonds are either issued by governments or corporations. So option B looks like the correct answer. Let us still evaluate option C and D as well. Option C is commercial banks provide various types of loans like personal loan, business loan, auto loan. So again, this is not the answer. And option D, mortgages. Commercial banks commonly offer mortgages to help individuals finance home purchases. So the answer for this question is option B, that is bonds, as bonds are not a primary service provided by commercial banks. Next, question number 18. What is a function of stock exchange? This is from 2018 Feb March paper, version 2. Let us look at all the options and answer. Option A, it allows company shares to be traded. Now this accurately describes a function of stock exchanges where investors buy and sell shares of publicly traded companies. So this is the answer. However, let us look at other options also, B, C and D. Option B, it enables tourists to purchase foreign currency. Now this function is typically associated with currency exchange markets, not stock exchanges. Option C, it provides a market for firms to sell their products. Now stock exchanges do not sell products. They facilitate the trading of financial securities. And option D, it sets the rate of interest in an economy. Interest rates are determined by central banks and market forces, not stock exchanges. So the correct answer for this question is option A. 19th question. Which statement about financial matters is correct? They have given us 4 statements, A, B, C and D. This is from 2017 May-June paper, version 2. Now let us look at option A. Commercial banks' main activity is the finance of international trade. Now here, while commercial banks participate in international trade finance, their main activities include a wide range of services such as providing loans, accepting deposits, and offering various financial products. So this is not the answer. Option B, paper banknotes possess all the desirable properties needed to act as money. Here, while paper money has many properties of good money like portability and divisibility, it may not possess all desirable qualities such as durability and intrinsic value. So again, this is not the answer. Option C, stock exchanges trade mainly in second-hand stocks and shares. Now this statement is correct because stock exchanges primarily facilitate the buying and selling of existing shares rather than new issuances. So option C is the correct answer. Lastly, option D. Let us evaluate this also. The central bank acts as a lender of last resort to companies facing bankruptcy. Your central bank primarily acts as a lender of last resort to financial institutions, not directly to companies. Therefore, option C is the only accurate statement regarding financial matters. So this is the correct answer, option C. Moving to question 20. What function does a central bank fulfill? It issues currency, it offers overdraft facilities to individuals, it operates deposit accounts, it raises taxation. This is from 2016 May-June version 3. Here, when we talk about the first option A, that is, it issues currency. This is a primary function of central banks, giving them the exclusive authority to produce and distribute national currency. This is the correct answer. Let us evaluate options B, C and D also. Option B, it offers overdraft facilities to individuals. Now this is associated with commercial banks, not central banks. Option C, it operates deposit accounts. Here, while some central banks may hold account for government entities, they do not offer deposit accounts to the general public like how commercial banks do. Lastly, option D, it raises taxation. Again, taxation is managed by government entities, not central banks. Central banks focus on monetary policy, not fiscal policy. So the correct answer for this question is option A. Coming to question 21. When will a central bank act as a lender of last resort to commercial bank? That is, option A, when a commercial bank faces liquidity crisis. Option B, when a commercial bank fails to make a profit. Option C, when a commercial bank needs to raise share capital. Or option D, when a commercial bank reduces its lending rates. This is from 2016 May-June paper version 2. Here option A looks as the correct answer. That is, when commercial bank faces liquidity crisis. This is the primary reason a central bank acts as a lender of last resort. That is, it provides emergency funding to ensure the bank can meet its short-term obligations. Option B, when a commercial bank fails to make a profit. Now, profitability issues do not trigger the lender of last resort function. Central banks typically intervene only in liquidity crisis. Option C, when a commercial bank needs to raise share capital. Again, central banks do not provide funding for capital raising. This is usually done through equity markets or other financial instruments. Lastly, option D, when a commercial bank reduces its lending rates. Again, changes in lending rates do not prompt central bank intervention as a lender of last resort. So the correct answer for this question is option A. Moving to question 22. What is the usual reason why citizens trust their country's banknotes? Option A, they are acceptable for trade and exchange. Option B, they are backed by gold at central bank. Option C, they are convertible into US dollars or Chinese yuan. Option D, they are recognizable and infinite in supply. Now this is from 2016 May-June paper version 1. So here, when we look at option A, this looks as the correct answer, that they are acceptable for trade and exchange. This is the main reason citizens trust their banknotes. The acceptance of currency for transactions and trade is fundamental to its value and trustworthiness. Looking at option B, they are backed by gold at central bank. Now most modern currencies are not backed by gold. A system known as gold standard has largely been abandoned. Instead, they rely on a trust in government. So again, this is not the answer. Option C, they are convertible into US dollars or Chinese yuan. So now, while some currencies may be convertible to foreign currencies, this is not a primary reason for domestic trust in a currency. So again, this is not the answer. Lastly, they are recognizable and in infinite supply. So here, recognizability contributes to trust, but the notion of infinite supply can undermine trust. If a currency is perceived to be printed without limit, then it can lead to inflation concerns. Therefore, option A is the most accurate reasons for why citizens trust their country's banknotes. Proceeding with question number 23. A businesswoman seeks a 10-year loan from a bank. She has listed her 4 most valuable possessions which could be offered to the bank in order to obtain the loan. Which item would the bank be least likely to accept as security for the loan? Option A, collectible of gold coins, jewelry and antiques. Option B, a house in a desirable part of town. Option C, a part ownership in a racehorse. Option D, a portfolio of government bonds. Now this is from 2015 May-June paper version 2. Here, when we look at option A, this can be valuable and tangible, making it a viable form of collateral. So this is not the answer. Looking at option B, Again, house. So real estate is commonly accepted as a collateral due to its significant value and stability. So again, this is not the answer. Option C, part ownership in a racehouse. Now this is less conventional and more difficult to appraise and liquidate as compared to the other options, making it less attractive as a collateral. So this is the correct answer. However, exploring option D, portfolio of government bonds. Now government bonds are considered to be the most stable and valuable assets, often as compared and accepted as a collateral. So the correct answer for this question is option C. Proceeding with question 24. Cigarettes have been used as money in exceptional circumstances. What is the most likely reason that they are not acceptable as money in normal circumstances? Option A, cigarettes lack durability. Option B, they lack intrinsic value. Option C, they lack portability. Option D, they lack uniformity. This is from 2015 May-June paper version 1. The correct answer for this is option A, that is, they lack durability. Now, cigarettes can spoil or degrade over time, making them less reliable as a form of money compared to more durable forms like coins and notes. Let us, however, expand and view our option B, C and D also. Option B, that they lack intrinsic value. Now, while cigarettes may not have intrinsic value in the same way that gold does, it is not the primary reason that they are not used as money. They still hold value in specific contexts. Option C, they lack portability. Now, cigarettes are relatively portable compared to other forms of money. So again, this is not a significant barrier to use them as a currency. Option D, that they lack uniformity. Again, cigarettes can vary by brand and type, but this inconsistency is less impactful than issues related to their durability. So the correct answer for this is option A, as it is the most accurate reason why cigarettes are not acceptable as money in normal circumstances. Looking at the last question for this video, question number 25. This is from 2015 Feb-March paper version 2. In 2011, the Bank of England released into circulation a new design for the £50 note to replace the old design £50 note. What might have been the reason for issuing these notes? The options are given. Let us explore each option and answer together. Option A, to ease the use of the barter system. Now this is unlikely as the barter system is not the primary focus of currency updates. Modern currency aims to facilitate transactions rather than replace them. Looking at option B, to enable a mean of exchange. This is the correct answer. Issuing banknotes, new banknotes, often aims to improve efficiency, security and usability of the currency, ensuring that it remains a reliable means of exchange. This is the correct answer. Yet let us look at option C and D as well. Option C is to lower the external value of the pound sterling. Now, issuing new banknotes is not directly related to changing the external value of the currency. Exchange rates are influenced by broader economic factors. This is not the answer for this question. Lastly, option D, to reduce inflationary pressures in the economy. Now, while monetary policy can address inflation, the redesign of banknotes is not a direct tool for controlling inflationary pressures. Thus, option B is the most relevant reason for issuing new £50 notes. Thank you so much for watching my video on money and banking as a part of Cambridge IGCSE economics curriculum. I hope the insights we have discussed help clarify how to tackle multiple choice questions effectively. If you found this video helpful, please like, subscribe and share it with others who might benefit. Stay tuned for more content as we continue to delve into the world of economics. Until next time, keep questioning and learning. Thank you. Happy studying.